10 mortgage myths that I'm going to disabuse you of today. Hi, I'm Thomas Howe with McGrew Real Estate. The first mortgage myth is the current rate environment should have to do with whether or not you buy a house. Well, that's just not accurate. You've got to pay attention to your needs and the things that are important to you, and then let the mortgage environment follow. Don't worry so much about the mortgage rate environment. Instead, worry about finding a great home for you to live in. The second mortgage myth is that a 30-year fixed rate mortgage is always the best way to go. Well, if you're only going to be in a house for 5 to 7 years, you're going to do much better looking at some of the different mortgage products that are out there, such as a 10-year or a 5-year adjustable rate mortgage, which will have a lower rate, will enable your payment to be a little bit better, a little bit lower, and you'll be able to walk away with more equity in your home. The third is that if I pay my mortgage off early, I'm going to have to pay a penalty. All the mortgages that I've been involved in lately have a no prepayment penalty clause, which means that you can pay it off at any time. If your Aunt Gertie leaves you an inheritance that enables you to pay your mortgage off, go ahead and do it. No reason not to. The fourth mortgage myth is that the bank where you have your household deposits, where you keep your regular checking account, is always going to give you the best deal on your mortgage. Well, that's just not true. There's a lot of different options out there for you. Shop for a good mortgage rate, but also make sure you're shopping for a good mortgage lender. The person that you trust to help you with your biggest financial decision is very important. The fifth mortgage myth: mortgage rates are released by the entities once a day. As markets shift around the world, the morning rate might be different than the evening rate. Make sure that you're focused on where those rates are. You're going to get more than one rate throughout the day. And the sixth myth: always buy the most house or the most property that your mortgage will allow. Well, that's silly. Buy the house that works best for you. Make sure it's within your means and within the budget that fits for you, and that your buying power is really being paid attention to. Don't necessarily max out your credit. The seventh mortgage myth: you need 20% to buy a house. Many people believe that 20% down is a standard. But with the numerous mortgage products that are out there today, such as adjustable rate mortgages, Veterans Department mortgages, FHA loans, there's a lot of different things where you can come in with an awful lot less money out of pocket. You'll still pay closing costs, and some of those closing costs may be a little higher if you're putting less down, but still, 20% down is a very saw that doesn't cut anymore. The eighth important mortgage myth to ignore is that you always want to go for the absolute lowest rate. The terms and conditions, the strength of the lender, the relationship with your mortgage originator, all are very critical components to how you should make your decision about your mortgage. The ninth one is, first, let's go shop for a home, and then next, let's go find the mortgage. You're going to be much better off if you find out about what your buying power is by talking to a qualified mortgage professional before you start looking at homes. You'll know what your budget works for. The 10th mortgage myth: my offer has been accepted. Well, there's a lot of components that take place after the signing of the contract. Underwriting has a lot to say about that. Title has a lot to say about that. The appraisal has a lot to say about that. Pay attention to that. If you'd like to talk about any of these mortgage myths or anything else about real estate, give me a call, drop me a line, text me, thomashoweonline.com. I'm Thomas Howe, McGrew Real Estate. Real estate questions? Here's how.